Thing about why I don't short a bull market. So even though the probability is really high that we do pull back down in here, I wait for the confirmation that it's below this band to even trade on to begin with. We don't short bull markets. As I say, we break out to the upside. I don't short for the most part because 70% of months are bullish, and under any condition, 50% of days are going to be green. And so under ideal rocket scooter greater market conditions, 70%-ish days are green as well. So for the most part, I don't fight a green day ever. And green days don't like to sell off and have wicks. They usually like to stay green. So if the market is breaking green, I just, as a principle of the matter, don't try to short against it. I'm going to wait for the confirmation of the breakdown to take the big short. If the market's crashing, it'll give me plenty of time to get in on it. Now on the downside move, I will always long back in because of these probabilities. Red days usually wick up, and only 8% of days will close below this line. I do take the reversal case on the short side. So the neat thing is that on an upside break, I'll chase long. On a downside break, I'll buy on a strong pivot. Markets are irrational in DD bands. I'm not shorting, period. It's kind of the whole point of the rules. Sitting out right now, waiting for the fall is the best way to go. Now, the thing about why I don't short a bull market is because most people, I guess you guys do this too, and people always tell me I'm the guy when I teach them stuff. They end up coming out of my boot camp saying, Matt, I used to short so much, and now I don't short that much at all. Even when markets are selling off, I'm usually sitting out a lot of the time with my money intact, waiting to hit it long. I will take a short when it appears and gives me that setup. And today, with this ratio less than half, any drop through here is a short setup for a big drop. But I need the confirmation. It's very important. Right now, the market is trying to break bullish and trying to become bullish. When it's trying to become bullish, I don't bet that it's falling. If you treat the stock market like it's a bowling ball that people are like lifting up, and the minute you let go, it falls, you're absolutely on the wrong side of the page of understanding how the market works. The market is not a bowling ball with any weight whatsoever that will fall when you stop pushing it. The market is a helium balloon that you're trying to push underwater, that when you let go, it bounces back up, and then the wind catches it, and then it floats away in the air. I always love showing people this particular chart because this tells you all you need to know about how the market moves on inflation. See, over time, the stock market just moves over time because of inflation. Your recessions aren't ever going to bring the stock market down to zero. Your recessions are going to bring your market down 8% of the last run's gain. If you put this on a log chart, you will see the same thing. But the market is just exponentially curving forever and ever and ever and ever because inflation compounds in such a manner. Your stock market will inflate due to inflation, even without any activity to imbalance the supply and demand.